Good afternoon, ladies and gentlemen. Welcome to Business Today's Television. One of the most happening things that's taking place in the markets today is a very well-known company that's going public via an offer for sale as also a fresh issue of capital. It's Honasa Consumer Limited, better known as Mamaearth. The two promoters, Mr. and Mrs. Alagh, Varun and Ghazal, have joined us to discuss how this IPO is placed at the moment. Good afternoon to you and a very warm welcome on Business Today, both Varun and Ghazal. It's a pleasure to host you. And first off, let's just get the basic details in place and then we'll discuss as to how the pricing is arrived at. For the moment, we have an issue of somewhere like 1700 crore rupees, which is broken up into two parts. The size of the issue is priced at about 308 to 324 rupees per share, of which 365 crore rupees is a fresh issue and somewhere like 1352 crore rupees is an issue of offer for sale from existing promoters as well as investors who came in early, and that's how the structure is. A warm welcome to you, Ghazal and Varun. Let's just first start discussing the business of the company. It's a 7-year-old startup in baby care, face care, hair care, which has been built up primarily on the online space and with acquisitions of very well-known brands. How do you see yourself, say, 2 or 3 years down the line? And what is the funds which are being issued freshly being utilized for?
So thank you so much for having us. It's been a very exciting journey, the one that we've covered in the last 7 years. Honasa Consumer actually started with its first brand as Mamaearth almost in December of 2016, and focusing on Indian cultural traditions and the Dadima Nanima ke nuske. And what we realized was that while a lot of brands were selling to India, nobody was actually crafting for India. And that's what we decided Honasa Consumer is going to stand for. Mamaearth is, of course, the fastest 2,000 crore brand. We've also built the Dermaco, which is a 300 crore ARR brand already in just 3 years of time. We have Aqualogica, which is a brand that we have crafted considering Indian weather in mind. It's already a 150 crore ARR brand in less than 18 months. We've done 2 acquisitions as well, which is BBlunt and Dr. Sheth, and both of them continue to grow very strongly. I think what we've done is perfected our playbooks that we developed with Mamaearth, and we've realized that those playbooks can actually be replicated on all of our younger brands as well. And we are seeing, very good growth and efficient growth coming in, and that's what we would like to do going forward as well.
Right. Yeah. Let's get Varun into the conversation. Varun, for the size, which is 1700 crore rupees, 365 crores is an issue of fresh shares aimed at a set of events that you wish to take place over the next maybe 1 or 2 years. What is the utilization of 365 crores?
Bhatnagarji, actually, if you look at it, the core business of the company is to build brands which can then consumers can buy and generate sort of, and value for the company. And hence, from the fresh issue, while we are a profitable company which is cash generating and negative working capital, and the funds that we are raising, we want to utilize for one, building brands. And continuing to sort of, increase our awareness, right? Second is to expand distribution. And we are there in about 150,000 stores now. We want to increase that distribution footprint. And we also intend to open more exclusive brand outlets and, for Mamaearth, and about 150 of them over the next 3 years. Right? And, we also want to expand the footprint for our BBlunt salons. Right? And then we also want to keep some corpus for general corporate purposes and acquisitions that we potentially can evaluate in future.
Okay. Let's get to the nub of the matter, Varun and Ghazal. The issue that the market is facing here are twofold. You've priced it at, let's just say a value which the market finds hard to understand. The minimum price is 308 rupees, and it's a loss-making company as of now. And the fact that the business is just 7 years old, and there are lots of other issues. Let's just first try and understand what is your explanation of trying to price the issue at a minimum of 308 rupees per share, as also the fact that the existing investors are selling out at a value which is fairly substantial to them. I'll just give you an example. You both are promoters, so it's understandable. But the Marico family got the share allotted at 6 rupees. They will exit at a minimum of 308. Mr. Bansal got the share allotted at 3 rupees. He is exiting at 308 bare minimal. So somebody is making a 100 times return, and here is a retail shareholder coming in at peak valuations, which seem to be hard to defend at this time. Your view?
So let me break it down into three parts. Right? Firstly, from a financial performance perspective, we are not a loss-making company. Right? We in FY22 we were a 980 crore revenue company. In FY23 we made 1500 crores in revenue, 58% growth. In Q1 of FY24 we have done about close to 500 crores in revenue. Right? Even last couple of years, we were EBITDA positive. In FY23, we have an exceptional item in our P&L, which is on account of a goodwill impairment, and because of which it is looking like a loss making. But otherwise, last 3 years, we've actually paid taxes. In Q1 of FY24, we have generated 25 crores in profits, right? And in fact, much higher in cash to the tune of about 48 crores, right? So I think that's a correction that I wanted to make. Right? Secondly, for a fast-growing company like ours, and the right benchmarks around comparison or ratio comparisons that one should look at, right, would be EV to revenue, right, which is price to revenue or price to sales, or price to gross margin. Right? I think those are much better metrics because we are growing much faster than the industry and in our invest mode, right? Where we have not reached our stable EBITDAs. Right? And if you compare basis those comparisons, and the 10,000 crore valuation that we are looking at, right, is actually a discount to the FMCG median pack that we can compare to. And if the growth continues, it will actually be in a fairly good state. Right? The second area that I would to point out is some of the investors that you talked about, right, came into the company when the company was doing just less than 1 crores a month revenue, right? And had taken very significant risks. And it was a company which was just about 25 people company. And from that 1 crore a month, the company has now grown to 150 crores plus, right? Monthly, and to 1,000 people organization. So I think the risk that they took at that time, and it was a very different risk, and they are being rewarded for that kind of a risk that they have taken. And people who come in now and would be looking at how the future performance and growth of the company comes in, right? And evaluating basis that, and would make return basis that profile.
Varun, the issue here is that this was the same set of arguments that we heard from your internet peers, whether it's Policy Bazaar, whether it's Paytm. And over the last 27 years, I have learnt one thing, that an investment banker never learns. All he does is he tells the same story priced at an exorbitant rate to a new set of investors. And it seems that Mamaearth is also going the same way. The problem here is that the metrics that you point out are good enough in the private equity space, but when you come to our side of the market, which is the listed space, they frankly fall short. And here is another thing that I've learnt over time, is that a promoter's vision is exchanged by the cash which the retail shareholder offers in hope for future growth. So the way that you've priced the IPO, or the way that investment bankers have priced the IPO, leaves little or nothing at all on the table for the new investor who's coming in?
So I'd like to mention two or three things here to clarify how this entire process around valuation, company growth, and future prospects work, right? So, for example, when it comes to valuation, it's actually a team of bankers and possibly more than 100 plus investors who we have met, who've had conversations with us, who've looked at our business model, understood what we have done in the past, got fairly detailed into the entire, like you're talking about the RHP, right? And understood the model really well for them to come up to a conclusion that this is a,
Please continue, ma'am.
yeah, to come to a point that this is actually a fair valuation for the kind of business that we have built and the kind of model which helps us predict the future as well. That said, second thing that I would like to talk about is the fact that you're talking about promoters. We are selling less than we are selling 1%. 97% of our ownership is still within the company, and we are in this for a very, very long term because we truly believe the opportunity is large enough, and the models that we have built, we have been actually replicated it over 6 brands, and we will continue to do that in the future as well. Thirdly, even our existing investors are not exiting fully. They are actually holding more than what they are selling right now because they believe that we believe that they also have a long-term vision. So I think it's actually an amalgamation of a lot of things, a lot of points that come together.
In fact, our largest investor is not selling a single share.
Much of it will have a lot of clarity on Friday, November 10th, when Honasa or Mamaearth, as you know it, will get listed. The other thing, Varun and Ghazal, is the fact that so far the sales that have come from online platforms, and you incur a very, very heavy advertising spend to keep that treadmill running as fast as it can be. Could you just share with us what is the percentage of advertising cost as a percentage of total revenue, and how do you see it moving over the next 1 year or so?
Yeah, so firstly, I would like to clarify that 60% of our sales comes from online, 35% of our sale already comes from the offline segment. And we've built that out in the last 3 years. And over 450 distributors, 150,000 stores is where we are reaching. So it's a sizable business already for us, and it's growing the fastest. And from a ad spends perspective, till 2 years back, we were at about 40% ANP reinvestment rate, and we are now at about 35% ANP reinvestment rate. Mind you, that also is a combination of 6 brands now. And 2 years back, it was just 2 brands, right? So we are actually investing more on brands, but overall becoming still far more efficient. And we believe as brands grow and scale, and there is a lot of leverage that we are seeing, which is coming from this bucket, and which is showing up in our EBITDA as well. Like I said, from a 1.5% EBITDA last year, we are up to about 6% EBITDA already in Q1.
Right. And this is Mamaearth's second approach to the capital markets. The first one, which was in January, sort of got pushed back because of the valuations that were being sought for. Even now, it's the same question, but let us see how investors sort of respond to this one. The other point, Varun, is that the sales...
Never came to the capital markets before this. This is our first approach. And we had filed our DRHP in December, and we got our DRHP approval in August 10th. And all of the valuations in between were just rumors. We have come up with the valuation for the first time, which is during this offering.
Fair point. And a point well taken that the issue was priced, the issue was submitted in January of 2023 at a certain level, and it is coming at a different price point at this point of time. The other issue, Varun and Ghazal, is that this very sharp surge in revenue has more or less been arrived at by acquisitions, which is you brought over Be Blunt, you acquired other brands. Mamaearth, of course, is something that both of you have developed organically. Are there other acquisitions in the pipeline?
So again, we'd like to clarify that's an incorrect assumption. And After Mamaearth, we have developed the derma company ourselves, right? Which is, like Ghazal said, a 300 crore run rate brand already. We have developed Aqualogica ourselves and launched it. And under 2 years, it's a 150 crore brand. And we did acquire two brands, Be Blunt and Dr. Sheth. Right? But those acquisitions were very small in terms of their revenues. Right? We have actually grown them significantly, and using our organic playbooks, right? So in the last 1 year, Dr. Sheth has actually grown 20 times. Right? But when we acquired, it was a very small brand. So I think large part of the organization's growth has been driven organically. And even as we move forward, acquisitions is something which we will look at, but not as actively.
Okay. We wish you the very best, both Varun and Ghazal, as far as the listing is concerned. And of course, we hope that you get a fairly strong response from retail investors. But for now, there are a lot of questions as far as the pricing of the issue is concerned, and a bit of a tepid response when it comes from the retail side. Thank you so much for your time, and here's wishing you all the good luck for the coming years ahead.
Thank you.
Thank you.